Good evening, all. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is we are now on Wednesday, the 16th of November, 2022, around 7 at night. You know what tomorrow is? My live webinar. That's what you're seeing back here. So if you haven't gotten an invite from me, you're not going to get one because I don't have your email address and everything to send you, or you're blocking it. Either way, if you click up at the top here, you'll be able to register for it. It opens at 12:15 p.m. Central Time. It begins 12:30 p.m. Central Time, ends at 12:50. 20 minutes later it ends. It is rock and roll time. We fly through charts. I respond to questions. I won't bring on, I can tell you already, I will not have the time to bring on any charts for the SPDR ETF or stock part of it that I don't get ahead of time. I've got that many already. And I won't be able to create them on the fly. I have all the futures charts. So you can ask your futures questions live of me. Just type them in and I'll be able to get to them because I've got those all preset. But how does somebody, I'm a one-man crew on that, how am I going to set that up? All right, I'm not a Kramer with a staff behind them, and even they get a heads up. You think those phone calls, they don't know what the guy's going to ask? They already brought up the chart, and Kramer can bring it right up and push his magic buttons, and away he goes, all right? I applaud that. All right. So let's take a look at what we've got, which is pretty much a sea of red. I mean, you have some green, but it's red. There's a lot of red. The market's trying to correct a little bit or pause out right here. There's no major reports coming out that I can see to move the market up or down right now. Tomorrow we will get the bank, well, not the bank, but from the Prime Minister of the UK, we're going to get what the budget looks like and what they're doing. Tonight, NBC declared that the House race is over. Republicans have won. And we've got a brand new event happening there. Very, very impressive, of course. And we'll see how that all goes. Mr. McConnell has won again. He beat Rick Scott in the Senate. So he will be representing the Republican Party in there. And here's the good news. So long, Nancy. Tired of looking at you. All right. Here's DraftKings. Remember I said I thought you'd come up, fill a gap up here, and what would happen in there. Well, that's exactly it. The market stalled on this. So that bounce has occurred past tense. Now, what it does here, the next leg, gets to be real interesting. And that's why you're stalling out. The market's trying to figure out, what do I do next? When you take a look at the swing line, it looks so much easier. Higher lows, higher highs. But to break the uptrend, you got to get all the way back here under 1140. You'd be giving up that whole move. You rallied into the 100-day average of closes, and often the first test of a major moving average is a zone the market has problems with. That's where you're at, and if you put the Bollinger Band, it's nowhere near it. It was the 200. You could see how the market went there, tried this go, let me kiss you, and that's basically what happened. So you're in a resistance zone where I think this market needs a lot more work. The most important thing it did is it filled a big gap in the chart. And when you look at momentum, it is up and sort of going sideways now. So we have the bias up, the trend up, momentum up. There's nothing bearish. Where do you put a stop becomes the question, and it's underneath where this whole thing began. That's too much to risk. When I look at lithium, I'm not surprised that it's pulling back. What did we talk about? The first challenge of the 100, 200-day average. Yes, you got over it for 3 more days. That's nothing in the scheme of things, and down. So the zone, that was the whole key there, that the rally, and it was bullish. No ifs, ands, or buts, but I think the pros came out in that general area. Went a little further, doesn't matter. It's trying to regroup now, and from that, we'll be able to figure out what to do. But you're overbought as can be. See how that's working? Let that work itself out. In Apple, Apple's losing $1 billion a week. That's what the company came out and said because of the chip deal out of China. They can't get their phones. That's why they're running around the world saying, we got to get away from this. We got to be able to get our phones made elsewhere. Wake up, Apple. What took you so long? Why would you concentrate there? You saw their policy 2 years ago, and now you're just responding to this? Shame on you. All right? That's the first bad management thing I've seen them do. They had 2 years to plan this, and China doesn't make these changes very fast, right? They take forever. In Disney, a bounce, but now what do you do next? That becomes, what do you do? It's a bounce and nothing more than that. No uptrend to hang on and no downtrend. I think you're just observing. Then we get to XLF. And I had told my clients and my subscriber parts of it, I said, number one, I like the idea that the banks can charge more money. And the fact that the long-term rates aren't going up means they'll be loaning money. If you're watching corporations, they have been running to the banks to establish large credit lines in preparation for a slowdown. And that's what you're going to get. If you think you're not going to get one, forget it. I was reading how Amazon workers are mad at Amazon. Your anger's at the wrong guy. The anger should be at the Federal Reserve. They've told you they have to slow the economy down to control inflation. As they do it, people don't buy as much. You hurt demand. That is the key to inflation. So Amazon's a purveyor of goods. They don't create the economy. The Fed's reining it in. Understand that. And please understand that in order to survive as these companies, as big as they are, they have to trim, they have to stay ahead of the game, they have to be innovative. And what they have to do right now is they're cutting back right in front of Christmas. Aren't you getting the message? Every tech company's cutting back right now. That's what's going on. XLI, still embedded. So the industrial sector is still the strength. The pros are buying this. They'll dump it if the red line closes under 79. And barring that, I think they're buying, looking for another pump to the upside. In the semiconductors, boy, was this a surprise move. And I just keep reading about better things. Even NVIDIA and their gaming chips, they did very good. Now, are you going to lose the embedded reading? If you see that close under 79, you got to come out. Means more of a correction is going to come in, but it doesn't mean the overall bullishness of the market doesn't stay. It means the correction's underway. Home builders, again, I'm in amazement that they're up here. I get it. I read a report today about Piolte, Lennar, and the other big ones that are doing that. And what they're saying makes sense. The curve yield is such right now that it's all the front end, and the back end, where the mortgage money is and things of that nature, may have seen a peak. That's what got these going. The hope. The word is hope. Generally, the first move isn't real, so we'll see what happens there. Energy sector backing off. It's hard to want to own the energy sector while China's locking down even more as the COVID cases are growing. I heard in Illinois, for example, that our COVID cases are again growing, as is the flu. So you got to be very careful. We're at that type of season, and be careful. You don't need to get ill that way. In gold, we have moved to the right-hand side of the Bollinger Band. You had your 5 days up and over, and boom, right back. But it's bullish. Until that red line's under 79, give a good break here. I think the pros will buy this market. That's what I told my traders. But I don't think they should do it in silver. And you're going to say, well, what's the difference? It's embedded. It's the first challenge of the 200-day average. Generally, when you haven't hit that number in a very long period of time and you get to it, it's hard to get through it. It's where a lot of people just say, hey, give me my money. I did well in this and I'm going to roll and do something else. Copper's the same thing. Fighting right at the 200 in the upper Bollinger Band. No, I'm not telling you to get bearish. I don't think I stay as bullish. Does that make sense? It's time to trim. And TLT, this is the 20-year plus T-bonds and other instruments to make it up. The reason it's rallying is I'm telling you, the market is looking and saying, all the rest of this hike will primarily, not completely, but primarily affect the 2-month, the 3-month, the 6-month, the 1-year, 2-year, not so much the 10 and 30-year treasuries. That's what you've got to look at. In the dollar index, you keep falling. It's still bearish as can be, coming down here. And I was on Australian TV today, Sky Business, and I said, I got to tell you, as a chartist, you've made a top in this market. That doesn't mean you can't get corrections along the way. it's going to be hard to get back through that high. And the euro is acting like a market that wants to come alive, as you just had a bullish crossover where the 18-day average just got over the 100. And I said, as a chartist, and that's what I care about, I see a change. And if it's a long-term change, it's an interesting one because there's room to get on it. First inkling of it, very important. But we can talk about that tomorrow in the live webinar as well. I hope to see you there. I'll open the doors at 12:15 p.m. I started promptly at 12:30, barring some electricity going out in these offices. Barring that, no, I'll be there. It ends at 12:50. It is not going to be available as a recording to anybody. You click up here, move your cursor. That's where your invite area is. Fill it out, and I'll see you then. Have a good evening.